Hey Forex Fortune Hunters, it's Tom Wilmot. Welcome to those of you who are new to our video series, and welcome back to our members. We're pleased you're here today. This has been a crazy market. I'm recording this particular video on Saturday, March 14th. We went through unprecedented, historic kinds of volatility not seen in the equity markets in the U.S. since 1987, with huge 2,000-point moves on the Dow, hundreds of points on the ES, up and down, over and back, almost uncharted territory. So, are we pleased to be trading the Forex? What are some ways we can protect our account? What's the difference between Forex and equities? That's what the subject of this video is. So, hold on to your hats. We'll get started with our tips and tricks on our favorite templates right after this. Okay, fortune hunting friends, let's get started. Although many of you have seen previous videos and know about our templates, this particular template being the second method from our book, the amazing Zeelander Flytrap Forex trading system that's available on Amazon Kindle, that I finished in 2015. This particular second method still is extremely effective, and I wanted to share it with you again today so that we could recover our thoughts on how to best trade it, especially in volatile times. Now, bottom line is that when the 12 EMA, this yellow line here, crosses over the 24, we've in the past gotten a medallion. We have a crossover indicator that we can use. And in the case of the Zeelander Flytrap signal line, what we did was we would create, originally we would create a dashed horizontal line at the closing value of that candle. And then we'd wait. The idea was to wait for a double confirmation. We wanted to make sure that the traveling moving average penetrated and got through that Zeelander signal line, and that was an indication that yes, the trend was true, it wasn't a false breakout. Now we've also added here the stochastic, and notice the 833, which gives us a signal line in red, and also our stochastic in white. I'll open this up a little bit so you can see it. Notice that as we pull back, we drop down, we're dropping down, but then we cross over here, and you can see that's when you get the violent move to the north. Also, you pull back on the RSI, which is here, pull back to the 45-55 band, but don't penetrate it, and off you go to the north. Now, it's true that this particular setup doesn't happen every time. I know that for sure. I wanted to simply show you what we're looking for and what's possible with the use of this particular Metatrader template. Okay, so that's the basic setup. I've used a 47 EMA here just to be a fail-safe. Also, this would be the crossover you're looking for. This is where we want to be looking for a final kind of change in trend. And notice that our next crossover to the downside occurs right here at the intersection of those lines. So that's why I've optimized to the 47 or 48. Now notice also that we have the 12, 24, and the 47, 48 is double the 24. So when you're choosing your currency moving averages, I would suggest you kind of double them up for each one of the multiple moving averages. That's the idea. Okay, and this again we call the bands. We pull back into the bands. A giveaway that we're not going higher is this pullback here. We have a trend line kind of coming down in this direction. We can't penetrate and go higher, so that's when we see, and in fact, typically I would take myself out of the trade if I were still in it, when I got the close below the 24. And so that's the situation. You can notice here that we did drop down below the 45 level when we got to this particular point in the rollout of it overnight. Now, this line here happens to be in Forex.com, the day rollover, which is for me at 8 o'clock in Boston, New York timeframes. This is Eastern Daylight Time now, as we're recording this, as I mentioned, on March 20th, March 14th, 2020, in the midst of this crazy and volatile coronavirus financial meltdown marketplace. Now, in the introduction, I mentioned I was going to talk about 3, maybe 4 things that you can do to protect your account when the market is so volatile. And what I've been doing this week is I was trading futures, but I want to tell you that was not for the faint of heart. With 200-point moves in the ESE Mini, even for the micro edition, you could be out a lot of money very quickly with very violent changes in trend. In this particular case, you'll notice that even though this particular chart, which you see from March 11th, in the midst of this is on the screen, the Forex market, I thought, for our first point was slightly more stable and predictable than the futures. The futures were just all over the place all the time. The patterns that we're seeing here are the same patterns we see all the time in all our other videos. But the point is that the average true range of each candle has increased dramatically during this volatile time. So that's good news, and that's one reason you can stick with your Forex account here, because the Forex is, I think, a little easier to trade in this environment than the futures are, for sure. Now, options over in the area of our other interest, Fidelity Active Trader Pro, that's a little different matter. But surely we don't want to get caught and slam back to earth with some counter trend trades or the kinds of things that would take you out and ruin your account overnight. So that's number 1. Let's think about the Forex just as an opportunity to have a slightly more predictable set of patterns. Now, that's not to suggest that it's always the best. Let's look over here. Notice this area right here, which started out and was part of the morning session on the 12th of March. Notice over here we had some crazy market conditions in this particular area. We had a quick uptrend here on a 5-minute chart and so forth. But bottom line is still the predictability of the Forex, I think, has been superior to the futures and the equity market over the last week or 10 days. Now, the second thing that I'd like to bring to your attention is that you can, in fact, cut back on time. As I mentioned, this is the Euro USD, and this particular chart is a 5-minute chart. Now, even though the Euro USD has probably the lowest spread available to you from any broker, bottom line is, even on a regular basis, a 5-minute chart or a 1-minute chart wouldn't give you enough to take advantage of the signals. Even 1.5 pips is hard to cover. Maybe you go a half hour for 5 pips typically with the with the Euro USD. But in this environment, let's take a look at what's happening. I mean, it's just craziness. Here we go. We've got this from one session from 7 o'clock in the morning on in the U.S., 80 pips on the Euro USD. It's unprecedented, really, since I've been doing this. Was Friday trades. Here we go. We had down here was another 64 pips. So top to bottom on that for the day was something in the range from the London time frame all the way down to the close, 154 pips on the Euro USD. So the second thing I was going to say, in addition of trading Forex, drop down your time frames, because on the higher time frames, you're going to have to take counter trend trades because you're going to be waiting around for these big swings to happen. If you drop down to the 5-minute chart, you'll be in pretty good shape. And if you want to, the issue there is also it's going to limit your risk, because the distance from here, back up into this area or even back up into the signal line, which is where you could potentially put your stop, is 21 pips. On a 15 or 20-minute chart, that's going to be up in the 50 pip range. So that's one thing you want to keep in mind. And you could even, Now, if we drop down to the 1 minute chart, let's see what that looks like. See if it comes back here and gives us this. This was the afternoon session. Notice here that on the 1 minute chart, we had the predictable patterns. We're still trading with a trend, and we only had a 6 pip stop loss back to the line, and maybe we wouldn't even stay in it. I mean, if we crossed up here and got into the 47 or 48 EMA, maybe we'd get out of that trade. But look what happened to us in this volatile environment. We had 19, 20, 21, 22 pips just in that afternoon session on Friday of this past week. So once again, the second thing is drop your time frames down and see what happens next. Now, it's the weekend, so I can't really show you the specifics of this, but under new order, if you get involved in clicking on this, you can choose your contract size, and that's the third thing I wanted to tell you about. When you begin to enter your trade in the order window on Metatrader, the idea is very simply that you could cut your contract size down to as little as 20 cents a pip. Several times this week, when it was really rocking and rolling, I dropped down to 50 cents a pip from a typical $10 per pip contract size, which is a full contract size. But that's not for the faint of heart in these times. So use your opportunity, and even if you're dealing with a small, brand new $500 account, don't be embarrassed to take a 10 cent a pip kind of a trade. That's going to build your account over time. I was getting in this area, it was good for $20, $30 a move in the particular volatile patterns that we saw this week. And let's just go back once again and check here. Here was the 7 o'clock time frame, and we pulled up through this on Friday. We dropped down. We held very nicely right here at the signal line, and then we had a move in the 9:30 hour up 23 pips. And if you keep racking up your 23 pip trades, it isn't going to be long before your equity curve is moving up and to the right. So that's it for this video, friends. Please subscribe to our channel if these are helpful to you. Give us a like, that gets the word out. We've had a number of new subscribers lately, and that's been terrific. For those of you who are new, please also check in the description below the video, because we have put aside all of our templates and indicators in a special Dropbox.com account and file. And if you simply hit the buttons in the description below, it will take you to my website, fxfortunehunter.com. And there we can send you an email with an invitation to download for free all of those indicators. I'm going to try to do another video this afternoon talking about the same kinds of things, but using another of our favorite templates, the double whammy template with Trend Magic. So keep yourself alerted to that. If you subscribe, you'll definitely get an alert on your computer when that video is available. So for now, thanks a lot for watching. Stay safe, be profitable, and let's get some pips.